Good day, all. Ira Epstein of Linn and Associates with your metals market update. And this update is for Wednesday, January 29th, and here we are, 2020, and we're getting into the 2:40 time zone right now. Well, I just watched the FOMC announcement come out, and the Fed chair, what he said is going to keep interest rates down. It wasn't enough to keep the stock market that much higher. The market has given up its gains, as you can see. I'm not sure where it'll finish. I can tell you that the gold market is off the settlement price, probably about $4. It's higher than where it settled. Silver market was about a dime higher. Copper very closer to probably another 30, 40 cents lower than this. And the platinum market, well, you can see it's getting hit at the end of the day. Tomorrow we get the WHO, World Health Organization, emergency meeting. Are they going to put the world under an emergency watch on the coronavirus? I would like to see it. Here's why. I think if you can get an organization like the UN's WHO to coordinate with other countries, you get a better attack on this. What I don't know, and what none of us seem to know, is where's the crest in these outbreaks, and I think that's one of the things that everybody's looking at. It's certainly been weighing on the energy market, although I'm beginning to think that the gasoline at this 145 level it made this week, that could have been a blowout number. Bonds and notes, well, they have rallied rather smartly since the Fed talked. We went today from near 161 and a fraction under 159 in the 10-year yield. I haven't seen yet what the final prices are going to be, but that's all interesting to me. So in the gold market, don't forget, sometimes you look at closes only, and for the week, we're still up $3.90, and this is the highest close that we've had months on end. This is not bad action. I realize when you look at daily charts, you get a different picture. Sometimes a close-only chart is helpful. Now on the weekly chart, this is a back and fill action chart. This is Missile Day, as I like to call it. That was the day that the Iranians fired their missile at the U.S. troops. And by the way, we're up to 50 troops now that have been hurt. So when we first heard it's an all clear, it was. Nobody was physically hit by the missile except for the percussion. And guess what that's done? We have a lot of troops. 50's a big number that have now had a problem with this. That's not a small number. Are you aware today, it's all lost in the news, that another vessel off the coast of the United Arab Emirates on fire? We're questioning if it's been struck by a missile. Again, another attack. Who did it? Nobody's come out so far and taken credit for it, if that's what you want to call it. But that's another issue that we'll get into when we look at the crude. In the gold, this is not being lost on the gold. It's still overall, it's not a perfect world. I don't like, and I've said it every day to you, that this outside day down took out that low. Now, better action is starting to develop off this break, which could then be a true higher lows, higher highs, putting the market back into an uptrend. You tell me where you see the support of this market. Look at this 18-day average. You think that's not holding the market? It is. I call that the line in the sand. If this market gets up and over today's highs, or better yet, if it just doesn't take out today's low, I will then be able to say higher lows, higher highs, bullish trend, resistance back at 1586.50. So that's what I'm watching. Certainly no reasons at all to be in the bear camp in this market. Lots of reasons to be favorable to the market. And momentum is turned. So you've got momentum turned up. The bias is up. Very realistic that this, as I call it, this not perfect world is to this outside day down taken out. Now, what I would have loved to have seen on this outside day down to even make my world better when this occurred is coming back over that high within 2 days. It didn't do it. So it did it in the third day. It's not what I teach as to the part to it. But going home, I'm going to say this market's got bias up, trend up, could turn everything else in resistance, 1586.50 into play. The Feb gold, and it's Feb gold versus the March silver, Here at new highs on this move. So silver is not yet keeping up with gold. Now soon I'm going to move away from the Fed gold. I'm sure you're aware of that. And I'll go to the April gold versus maybe the March silver. I'll decide what I want to do for that ratio to keep you informed on it. But you can see here, silver went from the high to the low, and today it's bouncing over the Bollinger Band. Okay, but this market, unlike gold, is much weaker than the gold market. It is not trending. It's whipping back and forth in here. When you come to the copper market, as I call it, Dr. Copper. Copper is one of these markets that you know it's used in manufacturing. We know China's got a major issue with this coronavirus. Many of the corporations, Foxconn, Ford Company, they're all putting their upper chin out and they're saying, we're calling our people back on February 9th. Are they? I don't know. It's the chin forward. Copper is saying by these many days in a row under the Bollinger Band, look at that, you got your 5 now. I don't know if it's going to get a 6th or not. It could. It's rare that you do that. But this type of break, come on, folks, that's telling you how bearish the situation is. And resistance is back in the 270 level. So copper is attacking lows made all the way back here. It's not a sign of good things. That's a sign of a slowdown. Even the Fed chair said today, they're watching the Fed very closely, this coronavirus, because not enough of us know what's really going on with it. Has it crested? That is the one thing we all seem to want to know. Is the outbreak getting worse every day? Yeah, I see numbers going up 800-900 a day, and so do you. The death toll, not severe, it's bad. One death's bad. 132 is obviously bad, but it's not the plague. It's not where thousands are dying out there, but we don't know how severe it is yet. We've seen United Airlines saying they're not flying. The traffic, the foot traffic in Macau for this Lunar New Year down 79%. I had to read that number. I thought I read it wrong. I think it was 79%. Maybe it's 69, but it's a massive number. That's not good. Starbucks, it's today, they're talking closing even more stores. Yesterday, out of the 4,300 that they have in China, about half were closing. Now they're saying they're closing more. People are petrified to go out. And those little surgical masks you watch, I was reading about it, it's not enough. It's better than nothing, but it doesn't do the full job. 5 million people were on the run before the quarantines went in effect. Where did they go? And is it being spread? We've already seen in many countries now, I think there's 4 of them, I call that many, that human-to-human contact is causing now the spread of the disease. That's the thing we didn't want to hear. We thought it was limited to just those provinces. It's out of that. So the cat's out of the bottle there. In the platinum market, probably under pressure because are you going to need this platinum while the auto manufacturers aren't building these cars and car components in China? It's weighing on the market. That's one way to look at it. In the palladium market, you're making a challenge of the 18-day average. You are up back $30, but you're not trending. You've sold off from this 24, 27 all the way down about, what, 10% to the 2151 zone. And the question, of course, is this market peaking out? What's going on? I don't think traders know yet. In the dollar index, I'm a chartist. Throw the name off the chart. The first challenge of the Bollinger Band to me is the area that I teach that the pros take some money off the table. It was hit yesterday, it was hit again today, and you've run into a brick wall. No, I'm not bearish. I see the embedded reading. I see that you're starting to close in the 18-day average to the 100. So the dollar's winning because of this disease in part against a number of other currencies, and you've got to pay attention to that. And in the mornings, what I have you paying attention to is I wake up early. I'm a 4:30 riser. I go into bed earlier these days than I normally do because of all that's going on too. But I've already read what's going on in China, Asia specific, then I'm moving to Europe, then to the US. And the idea is to give you some confidence early in the morning as to what I'm seeing on the charts and maybe help you with your confidence in your trading. So I'm going to throw trade ideas at you. No, I'm not running into the office and shooting these videos that go on to YouTube that you're watching. These are private. These are for my subscribers. These are people paying me to get up in that morning, throw this information at them. We're going to change this ad for you because I'm going to tell my people to do this now. Get rid of this 5 ETFs in here. It's just on the futures markets. I make an ETF spider video now that I'm going to, at 3:30 in the afternoon, today to 4, I will record. And that's because they've closed already. I don't have to wake up early for the future traders to do that. And remember, the ETFs and the spiders are impacted by what the futures do. And no, I'm not going to combine the two into one video any longer. I'm going to have 2 subscription services for it. If I'm being paid in the morning, I might as well be paid in the afternoon. But I think you'll find that what I do is a thorough review, giving you trade ideas, throwing out what I think is going on both in the fundamentals, the tech part of the market, and I'm going to say buy here, sell there, here's your profit objective. It's very, very specific. The idea, and I'm going to be right and wrong like everybody else, to give you trade confidence. In the futures, I cover all this. We'll have an ad very shortly for the ETFs and show you how I cover all the different sectors there. We're up to about 20 some odd charts. Some of you write me and you tell me I'd like to see this included. I'll do that, but not at the end of the day spider. That's going to be in my video one that my subscribers get to see. And the beauty is right now it's free to you. So anybody that's a paid subscriber to my morning video is also getting for free at this time the Spider ETF video. And I've put a lot of time making the improvements in it. And I'm going to start putting the daily numbers out so that very shortly you're able to keep up with how I come up with the window envelopes and the like. At this time, if you haven't seen it, it's worth you taking a look. How do you get it? Well, to get my morning subscriber video, simply go to our website under research. Yeah, I'm asking you to spend $7.95 for 30 days. You tell me if you think it's worth it. Most of you, I think you're going to say, number one, for what it is. It's a heck of a lot, and you're getting this Monday through Friday morning, so it's pretty good. And then in the afternoon, I'm putting out the Spider ETF. Where do you go? www.iraepstein.com. Go to research, sign up for it there. You can click up here. It'll take you to that area as well. And yes, for the time being, as we're working out all the kinks and putting together subscription services for the Spider ETF video, you get that thrown in as well. I'm Ira Epstein. You have a good day. See you later.